Hello and welcome back to another episode of Risk and Evolution. I'm Avi and with me, my dear friend and half brother, Mike Gulla. How are you doing, Mike?
Yeah, good, Evie. It's good to see you, buddy.
Good to see you. So today we are joined by Peter Settel, from President and CEO of Bold Penguin, and one of the most experienced voices at the intersection, of insurance, technology, underwriting, and distribution. He has like a enormous and rich background, and it was one of the interesting episodes that I hear recently.
Oh, it was great. It was great. Peter is like a philosopher, man, in insurance and distribution.
Exactly.
Right? He comes across like a college professor, incredible human being. I've had the opportunity to know Peter for a really long time, and have gotten to do work with AmFam while he was at AmFam. Just an incredible experience in both the early revolution of insurtechs with his time at Homesite, and then going through the transition of being acquired by a large company like AmFam, moving through the AmFam organization, and now being the president and CEO of Bold Penguin, which is one of the largest commercial aggregation distribution platforms that exists in the insurance space.
And have
Uh,
a great marketing department.
Very much, very much. I love the penguin, man. I took a picture with the penguin in Vegas. But it's a great episode. It's really good to hear Peter's perspective, and I think it goes right in line when we talk about what we're doing with risk and revolution, and the understanding of where the market's headed. Distribution is a key component of that, and AI and other tools that are coming to the market are kind of changing the dynamic of how agents put policies in the hands of their customers. So it was a great show, man. It's a really, really exciting discussion. I think people are going to enjoy.
So without further ado, let's jump in.
Awesome.
Hey, Peter.
Evie, how
Thank
are you?
I'm great. Thank you for joining us for the one of the first episodes that we launched with Risk and Revolution. And we also, of course, we have Mike here. Hey, Mike.
Hi, Peter. Good to see you, brother.
Great to see you, Mike.
Awesome, man. Super, super, super excited to have you on. Evie and I have been looking forward to this interview for a long time, for a long,
Happy
long time.
early Thanksgiving to you guys.
Yeah, same to you, man. Same to
Yeah,
you. Same to
yeah.
you.
Yeah.
I have a great question I would love to start us off with, Peter. Obviously, you and I have known each other a long time. I know you've had just an incredibly successful career all around insurance. Would love to ask, man, what was your very first job that you had in insurance?
Yeah, I landed at Homesite about 26 years ago, and that was my first job in insurance. I knew nothing about insurance 26 years ago. I knew nothing about just about anything 26 years ago.
Great.
And that was my first job. I always say, like, I don't even think I had bought insurance in my life when I started working at Homesite, but joined an amazing group of people that were deep in insurance knowledge and had a great opportunity to learn alongside them.
That's incredible, man. Were you in underwriting support? Like, what was your actual role? Like, what did you do for them in the beginning? Just
I basically, my first job in insurance was as the head of IT for a startup insurance company. So I went from actually knowing nothing about insurance and knowing nothing about running like a budget, running growing an infrastructure, doing the vendor. I was a consultant before that, and I had my own company, but I started with a friend of mine when we were in college. So I knew a little bit about technology. I'll give myself a little bit of credit for that, but man, I knew nothing about like the job, and it's very different. I mean, I was in my 20s, going from being a pretty good consultant who knew pretty good, technology,
sure.
uh, good at that, to actually like being a senior leader of a startup company, trying to get a positive trajectory and return on other people's money was like a total like there's no like it was just there.
Where it
So
clicks.
yeah, yeah.
That's great. That's great. Yeah, it's funny, man. I always think about that from just the insurance industry as a whole. Like, I love to mentor people, and I love mentoring college students and kids that are just getting into the industry. And I always find it fascinating, like what you can do in insurance. If you dedicate a career to insurance, like where you can go and what you can do. I would love to kind of double down a little bit and understand a bit more from you on kind of that transition. Like, it's funny that you started off at what I would say is probably a very early insurtech
Yeah.
in Homesite, and then you transitioned into American Family and obviously had some very high level roles there, and now into what you're doing today at Bold Penguin. Would love anything, from your perspective on kind of making that transition from going to a larger carrier like an AmFam now into this kind of independent agent world and working with better technology and better distribution. Anything you share there would be really insightful.
Yeah, I mean, I would say that those early days of being at Homesite had created, and again, I had an opportunity to work with like great people, great humans, really great insurance people, and so we were an early insurtech before the word really existed. I mean, this was like right around the .com, so there was a lot of stuff going on. There were a lot of ideas that were getting funded, but our basic principles came from our leadership team, that I was able to be part of, which was it's about underwriting. We were not a technology company that happened to do insurance. We were an insurance company, full stack, capital, claims, rate making, underwriting, product design, technology to support the business model and to create advantage at the intersection of a few things, and really understanding what was going to be critical to a value proposition and how technology, data, digital technologies could help accelerate that market opportunity, but without ever sacrificing underwriting profit. And so, how do you do that? Where are there levers where you can create some margin? Where are there levers where you can reduce your customer acquisition cost? How do you start dealing with some of the realities of insurance in terms of, we're a property insurance company. So making sure we understood concentration and accumulation risk. And like, I had an opportunity to like ride along with some of the best thinkers in that area, and then keep on identifying from my job of not just keep the lights on. That was not why I was hired. It was, where are there ways in which we can create accelerated value through a practical use of technology? And it applied in a lot of it applied in a few discrete areas.
Sure.
And if we knew we could architect a solution that was going to give us an advantage on the pricing and rate making side, both in terms of the factory to be able to turn out rates in a few days versus a few months, and if we were able to get to low cost, high precision, granular, high dispersion rate making on a totally digital, no intermediary basis, we knew that could give us an advantage. And there were a couple of other areas, but like just understanding the difference between try to do everything that an insurance, technology role is versus do those things, but find those two or three things that you're going to be the best at in the industry, and then keep on extending that value, keep on extending what makes you best. I had a chance to learn that 25 years ago. And like, as I've moved into other roles, can't tell you how important it is that was my foundational knowledge, because as I've moved into these other roles, that's always my day one calculus.
Sure.
Where's that value coming from? What is that thing that we have an opportunity to be the best at in the industry? And if we are the best at it, what's the other areas of adjacent advantage that we're going to get when we become a breakout leader in that thing? And that's like my day one analysis of the job. Anytime I've moved from this to that. And, it's once you get conviction that you've identified that thing, and then you can really start driving investment into that, the job creates itself.
Oh, that's incredible, man. That's incredible. That's incredible. It sits well with me too, obviously, just understanding, again, going back to the insurance ecosystem. Like, so much of what you just said, and Evie, I know you'll appreciate this as an underwriting mind, right, is those core competencies still apply just as much today as they did 20 years ago, as much as they did 30, 40, 50 years ago in the insurance space. The tools and how we actually monitor and maintain those things, and the advancements in technology have obviously changed, but the value prop at the end of the day of what we're trying to do is still pretty much the same. That's really great.
It really is. And I don't dismiss what other people have tried to do, over the last 25 years. But when I look at that first generation of insurance, technology focused insurance companies, there were some breakout winners. And the breakout winners weren't necessarily trying to take an existing product and put it on a digital platform or put it on a digital marketplace. There's a lot of money going into those digital marketplace ideas at the time to try to bring new customers into existing companies. And that copy and paste mentality of like, we do something pretty well, let's now just expand the perimeter by taking advantage of some new technology, frontier technology, 0% success. But the companies that were authentically building new product, new pricing, new customer acquisition, the things that really mattered and were authentic to the new form factor, authentic to the new, customer need, a few of them succeeded. And I really feel like that is another piece of it, where it was like this copy and paste mentality, just because you can now take your existing stuff and put it into some other form factor. 0% interest in doing that, and like zero indication that succeeds.
Yeah.
But everybody does it every 5 to 10 years. Some new form factor, essentially, not just in insurance, but changes like in the world. The iPhone got created. Now you got cars that you can put some signal into. Like, there's all sorts of form factor shifts that happen in the broader space, and there's always an expectation that insurance is going to be a killer app in those new form factors. So somebody comes along and creates, the ability to deliver insurance into that space. And then there's a whole bunch of copy and paste stuff that tries to fill that 0% success rate. It's just not, insurance is cool, but you got to look at it as like a new job every year. You got to be really into the details. You got to understand unit costs. You got to understand, yield. You got to understand the levers of retention. And you've got to be always thinking about where those trade-offs between, super high customer satisfaction, super precise pricing and underwriting decisions, and cost.
Yep. And I'll throw something in there, Peter, and then Evy would love to hand it over to you. But I think about this too from an insurtech perspective, right? And having gone through that and been through an insurtech, the piece that's missing that I don't think you just hit on, that I think you would agree with, is kind of the event horizon of insurance as well, right? Yep. You can't operate on a 6-month trajectory. No. Successful, because underwriting profit is not made in 6 months, right? It's made in 6 years and 16 years, and like what the future of the program looks like based on all of the core concepts I think that you started off with. And that's a piece that's a struggle when you have new people that are trying to take in all of these new technologies and new opportunities to build the best app and build the best this or the best that. And it doesn't have the end results now that everybody's paying attention to, which is profitability and loss ratio, right?
If you're disciplined, and if you have disciplined investors, and if you have disciplined, basically, ownership, you have to recognize that what you just said is the most important reality of starting an insurance company or growing an insurance company, and one of the biggest flaws in that second decade of insurtech, because of the ability to take companies public maybe before they were ready, or to grow a company before it had that underlying understanding of that 6-year thing that you said, right? If you're talking about building out a technology infrastructure that's not just off the shelf, that's a fairly large investment that takes time to prove. If you're talking about growing a customer base in sort of a novel way, then the cost of acquisition, even if you're successful, is going to be pretty significant in that year one.
Mm-hmm.
And even if you're successful on the renewal side, which you have to be, you're not going to create enough underwriting profit on a gross basis to fund the cost of the new business. And so it takes time, even on a very successful basis, it takes time for all of those numbers to normalize, and even to have a credible path to see that the renewals will at some point cover, a normalized rate of growth for you to be able to take on additional investment at a reasonable rate for those investors that want to be part of, scaling the business.
Yep.
I mean, if you think you can do it in less than 6 years, there's not a lot of examples of that. And the more successful you are, the longer that period of time might be, because success means you want to drive more revenue into the new business side. So you got to have investors and ownership and a leadership team that want to really be part of that journey, and not just see some signal in the first 2 years and then flip it over to somebody else. I mean, that's not good ownership, and it's not the right mindset to grow a real, insurance company. Now, whether you're doing it as an MGA, or whether you're doing it, with a lot of reinsurance, or whether you're doing it with some other, capital structures, you still have to look at the business gross, and you have to recognize that whether you can isolate some economics and somebody else is holding the bag on stuff that's garbage, it's it's still one business. And so you have to look at it, top to bottom gross, and be able to say we're great, we're growing a really good business here.
Yep.
At the same time, if you can't grow, why do you exist? Right? I mean, let's run out, let's grab a whole bunch of customers, and then let's go into a negative glide path and show that we can get to profit. Who cares? Right? I mean, if you have 0% market share and you're getting to a point of profitability, who cares?
Yep.
If you're a startup, you have to have some value proposition that people care about, and you have to be able to grow that business profitably, but grow it at a rate that is, reflective of the fact that the market wants it. And if you can't do it, if you can only do one at a time, okay, that's fine. But that's not demonstrating success. That's demonstrating something other than success as a business.
Peter, let's talk about Ball Penguin. And I want to attack one angle about Ball Penguin and its distribution. Just before we are going to talk about the distribution, I want you just in one sentence, what is Ball Penguin, or what you are doing?
Sure.
In case there is the one of the in the audience that are not familiar with.
So Bolt Penguin is a commercial insurance distribution platform. So Bolt Penguin was started about a decade ago by some really, really smart people. And it was basically, the premise was, we're going to transform the way commercial submissions are processed, digitized, and taking advantage of the shift in what we believe in the commercial space that takes advantage of digital technologies in some way that creates value both for the carriers that want to participate in the network and for the producers, both at the retail agent level, the partner level, the broker level. So we are what we consider to be the largest and the premier distribution network for small commercial insurance in the US. And we can discuss that in a little bit more detail. And then over the past 5 years, we've been, partly through an acquisition and an acqui-hire, and then partly through the investments that we've made since, we've been increasing the amount of business that we're doing in the middle market, complex risk space, and internationally in terms of ingestion of submissions, processing of those submissions on a straight-through processing basis, and more and more the fulfillment side of the middle market complex risks. So think of it as distribution platform, focused only on commercial insurance. In the small business space, premier network for small commercial distribution in the US, and then expanding our capabilities in a few areas that we think are super relevant to continued growth of the business and value to our partners.
Why Ball Penguin? Why is
the name?
Yeah.
I think you'd have to ask the founders. There's a few different varieties of the story. I'm not sure any of them is exactly true. So if you know the founders, ask Ilya, and he'll give you an answer. And now, why Bolt Penguin now? Because I inherited a great company. I got an opportunity to be part of the American Family team. That American Family has been with Bolt Penguin really since its startup. We were a venture investor early on. We followed those investments through a couple of rounds, and then when I moved into my role a few years ago as Chief Strategy Officer for American Family bought Homesite about 12 years ago, and so I had a great opportunity for over a decade to be part of the American Family team. And when I was Chief Strategy Officer, we as a company made a decision to buy and acquire Bolt Penguin about 4 years ago.
Something in you wants to come back to InsurTech, to the startup scene?
every
Inch, you know.
of those three jobs. So being part of the leadership team at Homesite and scaling that business and being part of an amazing team there, us being acquired by American Family, and then having the opportunity to join the senior leadership team at American Family, both as chief technology officer and then as chief strategy officer, and then being part of the decision to acquire Bold Penguin, having the opportunity to be on the board of Bold Penguin for a period of time. I was the chairman of Bold Penguin, chairperson, and then to now take over as president and CEO, and really look at Bold Penguin's opportunity to grow more significantly now as an enterprise technology platform and an enterprise solution for the broader market. These have all been like unbelievable opportunities. Each of them has its own distinctness to it, different set of challenges, but they're all connected in a really special way. And it's a 25-year journey in insurance that I can see connectivity to what I'm doing now and how I'm approaching it and how I'm working with my team and how I'm working with the market that are similar to other things that I've done in the past 25 years, and I love it. So yeah, I doubt I answered your question. So I just wanted to represent that these aren't like random events. That the time I had at American Family and being part of a team that grew that business over a 5-year period, 6-year period, from a $10 billion business to a $20 billion business, and then being part of a team over the last few years that really made some unbelievably significant strategic decisions, which included the decision to buy Bold Penguin, and then use that to restructure a lot of the underwriting portfolio. Just incredible, I'm very thankful for the people that I've had a chance to work with and for the opportunities that I've been afforded. It's Thanksgiving, and I think about I think about the gratitude side and the people that I've worked with for all the time. But it's great to be able to reflect on it during Thanksgiving season.
Yeah, you have definitely, Peter. I've had the opportunity to know a lot of the folks that you've worked with over the years, going all the way back to the relationship we had with Homesite at Esurance and how forward thinking that was to sell Homesite home insurance with a online bindable quote for auto. I would love to just get your take on something here. And Evy, sorry to take this away, but just based
No, no.
on something, just have a reoccurring theme I keep hearing you talk about, and I think about this as a founder all the time. How important is it to surround yourself with the right people for the success of the company, right? I'd be curious
Yeah.
your take there.
You
You
can't.
know what? Just before you answer, I want to add on top of that, and how is relevant that the founders or the team will be someone from insurance with insurance background.
Yeah, that's great. That's great, Ed.
So,
Great, Ed.
I would say, when you look at, I'm going to go back to Homesite. When you look back at the founders of Homesite, Jim Stone, who's in Massachusetts and has had an unbelievable career in insurance. You can't. Looking back at my career, you can't understate how important it is for a startup to have the right ownership structure, and the right horizon and the right pressure points and the right measures of success. And what we had at Homesite was, from an ownership standpoint and a horizon and those pressure points of what success looks like, because we had to succeed. There was no easy day there. Like we had to be able to grow fast and have underwriting profit and have like total integrity in our numbers, never have to restate a number. The company was run really, really well, but it started from the founders and it started from the board, and it made its way down through us, the leadership team, and out to the culture of the company. And we had fun doing it. So I don't think that can be overstated, because that idea that it takes time to build something. Esurance and Homesite, incredible teams, right? Like I think of the team at Esurance as being one of those great teams. And both of them executed their strategy well. And both of them grew really, really fast. And both of them exhausted their capital because of their success. And both of them wound up getting bought about a decade in or whatever it was by a multi-line, US based large insurance company. And like when I look at it, I'm like, these are two of the most successful startup insurance companies ever. And both of them had to find their way into a larger balance sheet to allow them to be able to grow through that period in which acquiring business has to be funded by the profits of the renewing business on a gross basis, or you're not real. And so it's a very hard business. But Homesite to this day still operates as an independent company within American Family's balance sheet, not within American Family, the insurance business, and continues to have unbelievably good team, unbelievably good partnerships, and really, really fantastic results. So the ownership bit can't overstate how important it is, and how can't overstate how bad ownership is. And I don't want to
Yeah.
discourage anybody, but like bad ownership is a very, very hard thing to navigate against as a leadership team. And then the people you surround yourself with, part of it's luck. I was in my 20s and I happened to, I wound up in a room with people that, 25 years later, I think the world of. And, they're all just incredibly good people and incredibly smart and hard chargers and want to win and will find a path to, creating something amazing. And that was like an unbelievably good fortune. But I was smart enough not to leave, know when you're around something that's great and stay with it. And similarly at American Family, I mean, those teams get shaped too. There's a kernel, but then those teams get shaped. Some people come on, they don't make it. Some people leave, you backfill, you shape a team. You shape a team with the idea that we're trying to play, hardball here. We're trying to compete against great companies. We're trying to compete against, like, don't ever underestimate the quality of talent in the insurance space, especially now, because distribution is so hard, because the bar for, risk evaluation and pricing is so high, because capital is coming into the market in really, really smart ways by really, really smart investors into, pockets, particularly on the non-admitted and the reinsured side, where there's a lot more, freedom. You gotta look around the table and be like, would all of these guys want to recruit all of them? Would they want to recruit me? And if the answer is maybe or no, you don't even play the game. So yeah, you can't underestimate, and you got to work at it all the time. From my standpoint, I'm lucky enough to have lasted a while in this industry, but I never take it for granted. I'm working every day, working every year to put up bigger, results, demonstrate value, and continue to work with the people around me so they trust my judgment. So they trust me to make big bets. So they think that, without having to babysit me, without having to tell me what the goals are, that I'm going to come up with goals that make sense, that I'm going to challenge people, challenge myself, be totally honest in the results, and keep on looking to push the bar higher. And when you do that, and if you succeed more than you fail, people will be willing to make more bets with you, and people will want to work with you, and you'll be able to build that team that you need.
That's great. That's great. Yeah, that's amazing. It's amazing. I would love to pivot the conversation a little bit now into kind of the distribution and data challenges that we see and kind of what's come. And I think, your past experience as a CTO and a CIO, would be really curious your take on data and AI, right? Like they've been promised to do just all these amazing, great things. And there is definitely a place, I think personally, in AI, within the insurance ecosystem. But I'd be curious from what you've seen, Peter, like what's your perspective on this? What have you seen so far that you think works really, really well? And what do you think is something that is not working well when it comes to the AI equation?
I think that It's a great question. I mean, these are great questions. I personally believe that in the types of insurance that we're involved with, property and casualty, which has had a shift over time to take advantage of digital technologies, whether in the back office or in the customer space, and both. This is again, this is a long-term journey of the maturing and the use of digital technologies in life and in insurance. And when I look at all of that, there are a lot of technologies that continually improve the efficiency of actions, but they move the entire frontier. There's going to be early adopters, there's going to be laggards, but ultimately the frontier of ALAY or the frontier of servicing expense or the frontier of even commissions tends to find its point of buoyancy. And it takes different people to get there. And then the leaders may sustain an advantage and the laggards may see an improvement in their own results, but they'll still be a little bit further behind. But the overall frontier is kind of staying in unison. And so therefore the pricing then reflects that, the margins start to reflect that, and it's not a sustainable shift. It's an improvement, when you compare yourself to yourself, but it's not necessarily an improvement when you compare yourself to your competitors or a value that is distinct to the customer. But you do that. If you don't do that, then you're a complete laggard, and you'll have several years of pain as you try to catch up. But I mean, you do those things. Those things don't. I mean, those get a lot of headlines.
Sure.
Those things generate like hundreds of millions of dollars of money spent, and like big consulting firms are involved in them, and they're big transformation programs, and they get like massive headlines. But nobody ever looks back like 3 years later, 4 years later, and says, okay, for all those companies that made those headlines, can you find the distinct competitive advantage that they generated in the results 3 years later? And the answer is generally no one looks back. So it's fun. Headlines are fun. And they don't actually have any form of breakout advantage. The areas that you can get breakout advantage is by identifying, like I said at the beginning, what are those 2 or 3 things that we can really do that are different and better than the rest of the industry? And why do we have a right to be the company that does that thing different and better on a sustainable basis? And do we have the guts to be the leader? To be the leader that invests ahead of the market in those things because we think it's so critical to what we're going to continue to say we're different and better than everybody else. And one of those areas is generally around pricing sophistication. And if you can be a leader in that, that's an advantage that can have some running room. And there's a few companies that you can think of that have, created that as an advantage. It's authentic to who they are. They build their business model around it. And then they expand on that, every few years. And within that realm, data and AI, data and machine learning, data and statistics, data and modeling, and the ability to use those things to drive product differentiation and pricing advantage on a rapid basis is like obviously important. And so when I look at those areas versus kind of the other areas, um, with Hippo, with Esurance, I mean, the data that we can get that is novel is a lot easier 15 years ago to get some unique data set at scale than it is now, right?
Yeah.
So there was a lot of examples of people being early leaders and getting some of that edge data and investing in getting it, whether it was telematics, whether it was streaming data. Homesite had its way of getting very large, unique data sets through our partner model. Hippo, I'm always impressed with what they tried to do in the IoT space, and Esurance. Obviously, so much has happened in the telematics space for auto. Those are really good examples of where big data or unique data at scale can create an advantage. And then obviously the modeling tools that are going to turn that into, Eureka. We found some, novel relationships or interactions from a pricing standpoint, and then the ability to turn those into sellable products. That's always the space that I care most about. Like literally, like I find that if you can do that really, really well, and then find a way to turn that into something that is the nucleus of a product, insurance product, and then get that out to market in a way that is more efficient to access the customers you want. Like those 3 things, they're not easy to do, But
Yeah.
those are great. Like, so to me, it's like, what are the areas of data and AI that are fundamentally shaping that? And this is like where we've actually seen Pater, right? I mean, there are actually very good examples of that. So, uh, what do I think about it? I think we've under leveraged big data as an industry, and part of it is because of the rate filing and the product filing and the inability sometimes to use live data versus proxy data in filings, or using certain models that aren't permissible in the space. And it's the companies that really try to overcome some of those set-in barriers that find advantage. But if you think about all of what's available in just like the connected data space, the industry doesn't use much of any of it.
Yeah.
And so the opportunity still around data and just prediction AI is like, there's years of running room, and very few companies are breaking out of the pack. There's a lot of people doing a lot of things, but there's very few companies breaking out of the pack in the acquisition of data and the ability to use that data in novel ways to get some advantage on the pricing and the product components around that data. I'd be like, watch that space. I wouldn't take my eyes off that, because that's where I continue to find um, unbelievably untapped opportunity, and not, as I said, like not the breakout leaders that I would expect.
Yeah. Oh, that's great. That's a great response. Yeah, it kind of goes hand in hand with what you said about insurance and how insurance is using it, right? And they're kind of moving together. A lot of the data and AI companies right now, like nobody's becoming the leader because everybody's keeping up with each other so fast, right? And they're using AI to catch up to the other AI company, and it's just making it this big mess of companies that are all
And it's
kind of
not, yeah, it's not trying to be dismissive, but it's like, I've been thinking this and saying this for years. It's like, don't mischaracterize linear progression with innovation. When you talk to people in the insurance industry, and we're all sort of victims of this. I'm in the insurance industry, but like, doing a billing system upgrade that gives you like some massive advantage to use a different payment model is not innovation. It's linear progression off of something to something. It gets a lot of money, it gets a lot of attention, it gets a lot of headlines. Your team can stand up and get an award because now they use Stripe or Apple Pay or Bitcoin. That's not innovation. That is linear progression. It's linear progression that feels very big. It is big. It has high execution risk, I guess, but that's not innovation, and it shouldn't be characterized as innovation. It trivializes innovation. Um, so anyway, that's my we don't always get an opportunity to actually innovate. A lot of what we do is just make the plumbing better. But the areas that are going to be relevant from an innovation standpoint tend to be in those areas of that we talked about already.
Um, I have a funny question about innovation. I totally agree, 100% agree with you about that. But how about a disruption? Do you think we had like a real disruption in the industry? I will not mention a specific company that said we will disrupt the insurance world, but do you think we really had disruption?
Uh, yeah, but not from the ways in which we expected. We expected that the new entrants were going to disrupt the market in some way that was going to, basically eat the lunch of the legacy incumbent carriers. And in the admitted market, there's not real demonstration of that. What we see is that the industry, say, take auto, right? Take personal auto, which is a huge market.
Mhm.
It's been disrupted from within. When you look at the breakout leaders in the personal auto space, those that are growing most quickly, and there's only a couple that I'm thinking of. For most of that time, they're growing very, very quickly, and they're profitable. And they're profitable, and they're growing quickly, and they're able to actually increase their competitive distance from the rest of the field, to the point where, if you look 20 years ago till now, the amount of market share shift that has happened in personal auto, not because of the disruption from outside uh, forces, new carriers or new entrants to the market, but from a value proposition shift that became more favorable to the buying public, and those companies continuing to execute and outperform, execute and outperform. And if you play that out over a 5 or 10 year period, that creates the effect of breakout performance, where an overwhelmingly disproportionate share of revenue and profit go to a few, and everybody else either becomes the pack or a true laggard. And like, model that out for personal auto over the last 20 years, and you see that effect, very, very clearly. So it's a form of disruption. It's a very significant form of disruption, um, because now if you look at it and you go, new money coming in, do you think that personal auto is a place where you want to put your investment dollars? Is it investable? And it's really hard to make the case that it's investable unless some orthogonal thing happens and really disrupts the market. But absent that, the breakout leaders are in a position to continue to execute and get very positive results, because they're great companies. I mean, they've really focused on a couple of things that make them the best. They're not trying to be the best at everything, and doing that over and over again is a way to really disrupt that market in a fairly mature market, which is incredibly impressive. I think that when you look at other parts of the industry, have they been disrupted? When you look at commercial distribution in the United States, it's being disrupted by PE going into the broker space and consolidating distribution through M&A, and that the rate of consolidation is significant, and that's a very big bet. But that is a form of reshaping the commercial insurance market, because you're consolidating distribution, but it also has the potential secondary effect of consolidating carrier capacity as a byproduct of that. That's a form of disruption, but not the kind, again, that we would think would be fueled
Yeah.
by insurtech. The third area that I think is interesting and structural shift. I don't know. You tell me, Evie, if you think it's disruption. But I think the structural shift to the non-admitted space not being sort of ephemeral. Like, typically in the non-admitted space, there'd be some market dislocation. The admitted primary carriers couldn't solve it, so they pull back. E&S would come in and solve it for a period of time. The admitted market would figure out its path to solving it. It might take a year or two, and then that E&S window would close. And we've seen that play out in a lot of ways. But I think the structural shift to E&S, specialty underwriters, and some of these niche market players is more structural. And I think that the balance sheets that are coming in there have a longer term, more appropriate risk return profile to deal with some of the issues that are harder to deal with on an admitted market balance sheet, and the return profiles that are appropriate for that. And I think that creates an opportunity for innovation, actually. Like, that creates an opportunity for a little bit more freedom, different, investor profile, and solving very specific problems in very appropriate ways. And I feel like that's the vector of innovation that is most tangible right now as a form of potential disruption that is happening from new entrants into the market.
Yeah, we definitely see more and more new startups that getting to know the E&S market and the specialty market, and you see much more innovation there.
You see a lot of new entrants, but yes. So I agree with your premise there. But what you also see is big brokers that are creating their own facilities where
Right.
they have access to the customer, where they have distribution, and they've created a capability for them to create programs, spin them up very quickly, identify market opportunity, and have the ability to create a solution for those things with their own, either their own capital or bringing LPs into it. And so that's an interesting structure, with the brokers having the ability to spin those up. I think you also have large carriers now that recognize that their own E&S capabilities that they've had for a long time can become effective load balancing mechanisms inside of certain distribution. And again, that's a very important thing that I don't think is fully baked into distribution patterns right now, and something that we all care a lot about at Bold Penguin. Um, and then yeah, you have these independent MGAs that are coming in, but they're not all coming in with just VC. I mean, you have like very sophisticated capital coming into some of these MGAs. Some of them have gone public recently, and they're very well capitalized. They're bringing in great talent, great underwriters, and they have relationships with the larger brokers. So it's a definite structure shift. I think it's got a little bit more lasting power than what we've seen in the past, but it's still not easy to be a pure new entrant with like 3-year venture capital money to really take a big slug of that. We'll see, but I'd say that's the space that is solving a market need and is the area where I think we're going to see a tremendous amount, or we are seeing a tremendous amount of investment and the opportunity for real innovation.
I think you referred to Neptune for the IPO, right?
That's
Or
one that, yeah, certainly one. There are a couple others that we know them very, very well, that are good in that space. There's been several IPOs in the last 18, 24 months that matter. I think that one of the startups that I think is really innovative and really doing something that is necessary for the market, especially as we start to see the coverage gaps or protection gaps widening as the market sort of pulls back on its coverage limits, and is a company called Adaptive. That's
You guys noticed I just tried to sit here and be quiet through that whole conversation, right? I mean,
I truly think that the market need for parametric solutions is something we've all talked about for a number of years.
yeah.
I do think the market conditions favor parametric solutions now in very obvious ways and very tangible ways, and that is a form of innovation that I think very highly of. I think that there are ways for that to create a layer within a protection stack that actually provides a new solution to a problem. I think it has a lot of just fundamental insurance of being able to price for the macro more effectively on an ongoing basis than price for the micro, particularly when the participation in that is sort of skewed towards those that have the greatest need. And I think that it delivers a very, very tangible, very, very obvious value proposition at a time when, whether it's climate related issues or infrastructure stability or cyber events are obviously making our ability to rely on, certain things more uncertain and certainly more volatile. So I think that that's a perfect opportunity for parametric solutions to come in. And if somebody as bright as Mike can be leading the charge, sign me up, man. That's fantastic.
Well, Peter, I will tell you first, obviously, thank you for the kind words on that front. But I will say this in the broader sense, and I say this to the audience too. When I think about not just parametric products, but I think the combination of parametric products, the E&S market, the state of climate, the state of the regulatory body, the state of the federal government, there's a lot of culminating factors here that you've touched on, I think, throughout this entire conversation that I think now are aligning. Right. The thing that always, in my past life, in the last 20 years in insurance, that always kept that 2-year time horizon of the carriers letting things go into the non-admitted markets was the speed. Like the non-admitted market was always very slow. It was very hard. It was very agent intensive, and it was a lot of paperwork, and it was a lot of these things. This, to me, is one of the areas when you talk about innovation where distribution innovation and technology innovation have enabled E&S products to actually come to market a lot faster and reach a lot more people a lot quicker and a lot easier in a compliant way,
Yep.
because you're using technology to monitor it, where you're still following the letter of the law, but you're creating a better customer experience to give them access to some of these products. And now consumers are getting access to these products and are starting to realize that there's optionality there for them to kind of pick and choose the things they want to cover, which is great, man. I'm happy that you kind of talked about all the different aspects there, because it's not a single thing, right? It's multiple things that you combine together, which is important.
Yeah.
I know.
Peter,
Go ahead.
Go ahead. Yeah, I just want to.
uh,
Yeah.
I wanted to ask from a distribution point of view. Do you think you will need, especially as a commercial distribution, do you think you will need like educate your audience, the agents, to sell prevention tools or parametric solutions? Because it's not selling commercial fleas policy. It's not to sell as BOP or something else like the traditional one.
Right.
Right now, we are offering different tools that will be a better solution for your customer. So, do you think you will have like you will need to educate them or to act with a different approach? What do you take about on that?
Well, I mean, I think it depends on what portion of the distribution, spectrum you're discussing, right? So we
Okay.
have relationships that are with some of the largest brokers in the world that have a very, sophisticated group of just producers and underwriters on staff. I mean, so that's very high sophistication, um, which I think is a really important part of our distribution network. We have some very large partners that bring in, hundreds of thousands of leads per year, and they have very big brands, which is different. That's a different model altogether. And then we obviously have retail independent agents that are working with our solutions, one at a time. Um, I think with any introduction of something like parametric insurance for power outages, say, and the damage that a power outage can create in an area, there's two things happening. The education of the potential risk is happening through the media. It's happening through actual events. It's happening through lived experiences, and it's happening through storytelling in the local area of how these
Okay.
things happen.
Sorry to jump in, but I have another. Okay, so what do you think about cyber policies? Because we say and we saw cyber is not like you are not selling that as you sell auto insurance. You are still have a problem to sell cyber, especially to SMEs,
Yep.
an insurance agent. So obviously you have a
Very
lot.
similar. Yeah, I would look at it as a very similar issue with cyber, and also, the cyber market continues to be one of the most interesting, in my opinion, and actually super hard to do on either side. It's very hard to understand what you're buying as a consumer. It's very hard to explain that properly as an agent, or anybody on the retail space. And it's also extremely hard to price, and so you wind up with kind of more restrictions in certain areas, or closing the barn door after the horse has left the stable. I mean, it's you're eliminating coverage on a prospective basis, but you're on the hook on a looking backwards. I think that any of these things, whether it's cyber, whether it's flood, whether it's earthquake insurance, whether it's any kind of optional coverage on cat, wind policies, etc., and parametric as being part of that, is very hard to sell. What I think is underdone, even in the SMB space, is you try to sell cyber in year one. Well, I might have zero employees, so say cyber or any of these optional coverages. I might have zero employees. I might have less than $25,000 of revenue, and my likelihood of getting to a year later is uncertain or low. And that's when they say, "Oh, you need a cyber policy." Well, you don't, you know. But do they look back at the company when it's 3 years old and now they've got 15 employees, they've got 2 locations, they've got half a million or $1 million of revenue, and are they saying, now you really should have this conversation around cyber? Probably not as much as they ought to, they being the agent or they being the carrier. And so, from my standpoint, the latent understanding of risk is increasing over time just because of those things that we talked about earlier. But identifying the people who have a need and then being able to present them at the time when they have a need and a desire to do something about it is still underdone in our industry. And so when we look at, our access to data, our, partnerships and simple prediction logic. I mean, I don't use the term AI all the time because much of this is just simple prediction logic. There are cross-sell and bundling opportunities that can be done on a programmatic basis that we've already seen are more effective than the reliance on somebody who's not going to have a lot of upside for selling that secondary policy. So if you can do it in a way that fits within their mode of operation and doesn't disrupt their relationship with the customer, but it is an enhancer. It's an enhancer to the value that they're creating for the customer. It's an enhancement to the revenue that they're going to get. And that customer will have a higher likelihood of buying it because of the prediction and the way it's presented. That's an area that we're expanding our investments in Bold Penguin to be able to do that for these secondary products, because we think that a platform is necessary.
Yep.
And so, and one of the products we want to be able to offer up is whatever Mike's serving, and I don't want to use this as a, but I mean, the fact is, we think that, I've been in the market to try to sell flood, off of homeowners. I've been in the market to try to offer quake, in homeowners. And it's a very, very low penetration rate through traditional models. It requires, in my opinion, the ability to use data and technology to make that a higher success rate, and ultimately the customer benefits. So I feel good when we do those things.
Yep. Man, Evy, I feel like we could go for 3 more hours, man. I don't want to wrap this up.
Sure. Yeah,
I don't want to wrap this up. Peter, I want to be respectful on your time, man. I got to say, this has been a very enjoyable conversation, as I knew it would be. You've had a tremendous career. We love what you're doing at Bold Penguin, and I say this on a personal level more than a professional level. I make the comment about the team. You got a great group of folks over there that are doing some really fun things. A lot of really interesting things coming to the industry, and distribution is going to be key. So on behalf of myself, I will say, thank you so much for being on, and Evy as well.
Thank you, Peter. Yeah,
that's great. It's great to spend time with you guys, and I too could go on for a long time. I always go on for too long, so that's a constant with me. But love these conversations. Love what you guys are doing with the podcast.
This is the end of part 1. Okay, let's decide. This is the end of part 1, and we'll schedule.
There we go. We'll schedule a part 2. We'll schedule a part 2 and see how much has changed.
I think we could tap a lot deeper into the digitization of E&S and wholesale, and where we see opportunities for programmatic cross-sell within our platform. I mean, those are 2 areas that we're making very significant technology and people investments. So if you want to do a part 2, we can limit it to those 2 topics and we'll go deep.
Awesome. I love that idea.
All right, guys. All right.
Thanks, Peter. Appreciate it.
Thank you.
Bye.